It's okay if JP Morgan shorts silver for 2 decades, but it's not okay if we short JP Morgan. That is exactly correct, as there may perhaps be a ban on short selling, but not of short selling of any stock. What is going on, guys? Lottery Stocks here. Welcome back to the channel. Welcome to the channel. If you're new, happy Sunday. Hopefully you are all enjoying your weekend. Today, I want to talk about banks, a potential ban on short selling, how it affects AMC, and as well as a little bit of a sprinkle on top of what is happening to AMC coming forward into the lawsuit, going forward into the meeting. So this is the newest update that we have. Without further ado, all I ask you guys to do, it's free, it helps me out. Hit the like button, hit the subscribe button, turn post notifications on, and drop a comment. Let's get into the video. So analysts at JP Morgan believe U.S. regulators might target short selling to prevent a contagion amid the rising banking crisis. With several U.S. banks collapsing recently, the industry players have argued that short sellers are scaring people to think the crisis would ensnare more banks. JP Morgan analysts noted that this argument might temporarily force regulators to halt short selling activities. So a JP Morgan analyst is basically saying, since it's so scary that banks are collapsing, basically we are afraid of short sellers, and this might cause regulators to prevent them from actually engaging in the market. This article goes on to say, on May 4th, the American Banker Association wrote the U.S. Securities and Exchange Commission expressing worry that short sellers might be manipulating the market. ABA's chief policy officer, Naomi Camper, noted that some of the shares trading defy the underlying fundamentals. Meanwhile, JP Morgan highlighted the concern in its note. According to the banking giant, it has never been in a situation where a perfectly healthy bank ends up in the hands of the FDIC within a very short period of time. The bankers further noted that the pressure affected even banks in good financial positions, as more Americans now worry about their money in these banks. Short sellers have been blamed for stoking fears, leading to the significant price swings in shares of several regional banks. Pacific Western and Los Angeles and First Horizon in Tennessee have significantly declined in shareholder value over the past 2 months. Now, SPY is banning short sellers. Wondering why? First of all, the first reason why, of course, is because unrealized loss on investment securities are at all-time highs, and you can tell based off of this chart right here. Unrealized losses across the board are at the highest level that they have ever been at. Unrealized losses are highest at banks with long duration securities and or large securities portfolios. Banks reporting large unrealized losses may have limited ability to sell securities to fund loan demand or support any participated deposit withdrawals without recognizing losses. So banks are basically in a very tough spot, because if they interact with their day-to-day business, this might actually interfere with their recognizing losses, right? Right now they're unrealized, but they could become realized and they could essentially get put into the pit. Now, the reason the SEC would act now is that short sellers are screwing the 1%. This is the second reason why you might be wondering why a short selling ban might happen, and is because the SEC would try and prevent the screwing of 1%. The short sellers are finally, for the first time, screwing the 1%, and JP Morgan is not happy about it. Neither are the banks in general. Because just like Bernie Madoff, the shorts are stealing from the wrong people. I believe all the banks have similar Archegos bag in their books somewhere. The biggest banks know they need to be bigger to survive one more day. Speaking of Archegos, court documents recently show Archegos using swaps to raise and depress the price of stocks. All of these documents coming out as banks are in a very, very troubled time, and they want to finally point out what short sellers are doing. But nobody wanted to do this when the meme stock craze was going on. Wells Fargo, we went over that they just got a money market instrument failure issued by the DTCC right here, and the Lehman Brothers got this exact same notice 1 month before they collapsed. As always, the market never repeats, but it has a rhythm. Are more banks about to collapse over the horizon, or is the government coming to bail them out, which we're going to get on in a minute? Now, AMC is suing many insurers for failing to protect them from meritless allegations in the Allegheny lawsuit, which has cost AMC $4 million to defend so far, which is the insurer's responsibility under contract to cover the legal costs. And here are the legitimate court documents right here from this. AMC is basically saying we have these insurers to protect from meritless allegations, and they didn't do their job. They didn't cover the legal costs. So AMC is basically now suing the insurers for failing to protect them. Now, before we move on, guys, MooMoo is a one-stop trading app that helps you better discover how to trade. Some investors don't even know actually what they're looking for, but MooMoo provides free investing courses to level up your trading. This involves paper trading, which is a huge help in starting to trade. They have screeners to help you pick stocks and improve your timing when you enter trades. Besides all the good stuff, if you've never traded before, or if you're an advanced trader, they are having a new competition This is a paper trading competition across the US, so make sure to use my link, download MooMoo, make a deposit to get up to 15 free stocks and join their paper trading competition where you can win a $1,500 cash coupon for first place, second place gets a $1,000 cash coupon, third place gets a $500 cash coupon, and fourth to 20th place gets a $100 cash coupon. MooMoo is available for the United States, Australian, and Singapore members. Also guys, I forgot to put it into the video, but as I'm editing this, make sure to join the Discord. The link is under the video and in the description, so make sure to go join that. We post options trading alerts in there. We talk stocks all day long. We post losses, post gains, and I'm in there on the daily, all day, every day. We post the earnings and we take some degen bets. Overall, the Discord is dope. It has 400 of the most amazing people in there, and you won't regret it. Worst comes to worst, you can cancel. It's very cheap and, in my opinion, very well worth it. Now, U.S. government may freeze American bank withdrawals as currency panic and capital flight mounts. Now, this article was just issued May 6th. Hendry says a further decline in the M2 money supply, which in part tracks money in liquid checking accounts, could convince the U.S. government to step in and prevent citizens from taking their capital out of the banking system. Therefore, panic has grown and the government may have no choice but to take full control over the American citizen. You guys let me know how you would react to this. Are you keeping your money in the banks or are you taking them out of the banks? Do you think they have no other choice but to issue central bank digital currency and basically make that the go-to currency? Because Janet Yellen is even freaking out, stating that this may be the first time in forever that the US cannot pay on their debt. On top of that, just to close out the video, Binance temporarily suspends all Bitcoin withdrawals, citing a network congestion issue, even though Binance is currently being investigated by the SEC for a few different reasons, but network congestion issues just doesn't seem like what it's actually doing. Why Binance? Why only Bitcoin? And why only withdrawals? It just does not make sense. Overall, guys, you let me know what you think about this video. You let me know what you think about the ban on short selling. In my opinion, I think it's pretty messed up if they only ban short selling on these banks. And the reason for that is because every stock should be created equal. If Apple was being shorted into the floor and it was, affecting the company, well, then, they should stop short selling, right? If they're going to do that with banks. In my opinion, short selling shouldn't be completely banned across the board. It should be very, very, very regulated, and it should not kind of throw as big of a hammer between supply and demand in certain stock prices as it currently does. This is my outlook on it. They didn't do this for AMC. They didn't do this for GameStop. In fact, when they took the buy button away, they were basically only allowing you to short sell this stock. They saved 1%. And they are probably going to do it again, and you might see that happen this week. Overall, guys, this is what I got for you for today's video. Hopefully you enjoyed watching or found value out of the video. It is beautiful outside. I'm about to go outside. Make sure to subscribe to the channel, share the video, engage the algorithm. Peace.